Uranium friends, you look as I look. We're looking at the ETFs now. I'm not going over any individual names tonight because election day tomorrow could just change everything. But it's good enough to look at these ETFs and then Sprott fund and then probably spot price itself. So these daily charts, this is straight ass waterfall down, right? No relief at all. Same thing with URNJ. URA was a little bit different. It had its little bout of consolidation here, trying to hold a little, So URA has actually been showing relative strength for quite some time now, as opposed to these two other ETFs. I guess we should start looking at nukes because that part of the sector's been found. So I'm going to have to start bringing that one in. Anyway, that's the daily. So URA has been holding up better, and you'll see it on the weekly. And it's why, by the way, this was my rationale for when I made this alert about shorting puts. And it was really just hedges more than anything else. October 22nd, by the way. I did that because these were showing they were weaker than URA. So you could take a look at this last nice weekly double bottom that we had, and you look at the metrics based upon just this alone. But URA took out those recent highs from May. URNM and URNJ just they didn't come anywhere near it. So they were definitely weaker. They were a weaker part of the sector. So if you think there's a reversal, you look for things like that, right? So I didn't take URA puts. I took URNM and URNJ puts. They were the weaker names. So stuff like that just plays in. But regardless of that, let's just look at some longer term levels now. And really, what does it look like? So if you're paying attention, or if you listen to anything I said or posted or whatever, I was calling this a double bottom. There were some TA guys that say it's not a double bottom until it breaks this level. Yeah, okay. Either way, it was a low risk take here because you knew you were wrong if this broke. So we caught that run. It's a pretty good run. And, as we were going through this run, I said, this is making enough room for the next consolidation phase, the next pullback. The most likely scenario is a weekly higher low as compared to this level. I stand by that at this point because there's still so much room. This could probably, likely, maybe go through a little bout of sideways consolidation and continue and still leg down possibly into this 27, 28 area. And I would still say it's still a good double bottom. It will be a big time yellow flag for me. You don't want the 50% retracement. Ideally, this is where we want it to hold. This is the level that we want it to hold. It's like the 382 retracement. That still is technically in bull flag territory. So as bad as this feels, it shouldn't when you take it all into perspective from the run that it just had since September. It's a great run. But that's the deal. So the biggest, are we anywhere near any big levels? Yeah, we are, right? So we've had this, it's tried to break out of this level so many times, and it did it, and it's rejected. So it's just what we have to take. So now we're looking at these levels, and for the longest term look on this thing, a long term look, a very long term look. You just don't want this bottom to get lost. This 22, 20, 23 area, 23. You don't want to lose 23 on URA at any time because then it's just problematic. So yeah, it's another breakout rejection over here. But that's the process. So overall, in general, the chart looks great. You have the cup and handle look happening here. Pure technical analysts will say it's not because this right side has already breached this left, but the psychology is there. So the levels, everything looks fine on the long-term run on the ETF, and this actually looks fine as well. But the election could change everything. That's just the way it is. URNM and URNJ are going to look basically the same, other than the fact then that they're weaker, right? Because they did not take out these highs. That's the interesting part about it. We'll just take a look at the monthly now. Yeah, so you have your key levels, you have your key range. The Fibonacci's are run off of it. It's just that simple. URNM, we don't want to lose 37 bucks. That's for sure. We're trying to take out 52, 53. Yeah, that's what we're looking to do. But this action is okay. It's not horrible. It's not great. But same deal, right? Still, we're the most likely scenario. Well, this one's tapped a 50% retracement, so it's a little less likely. And if it is a little less likely, well, URA is probably gonna may possibly do the same thing. So because if you look at, and I just want to just show it again, URA had the strength up here, and it held while URNJ and URNM were still just waterfalling. It held. So it's still showing strength there. So if these continue to go down in the manner that they're going down, it's just going to drag URA with it, would be my guess. Just albeit maybe more slower, you know. But any person not knowledgeable in the uranium sector that comes and looks at this chart out of the blue says it's a great chart. So, and I agree, it's still a great chart. It's just there's volatility in it, and that's what trading's all about. So, weekly higher low, the most likely scenario, which really means that it's a monthly higher low compared to 38 bucks or whatever. So that's kind of what the deal is. And URNJ is really basically the same. Um, Again, I'm not getting too crazy with all this stuff because everything completely can change tomorrow or Wednesday. So, Sput on the weekly, this it's starting to look less and less like this bottom is going to be the bottom. I mean, that's just doesn't mean that that's the case, but it's just a constant weakness here, and there's a lot of problems or complaints about the way these guys run their fund. I don't care either way. The further, the more, the closer we get to this bottom, and the less likely the chances that it is the actual bottom. So we got to keep a good eye on it. Let me just see where this fibs are run. Yeah, so this is still a good fib run because there's your pivot up here. So this is the last pivot. These are the last good pivots, right? So there's your run. And we're just dancing on this 382 retracement. So still a monthly bull flag turning into a bit of a monthly pennant, right? But it's holding the 38% retracement. So if you look at it in that perspective, it looks absolutely fine. You can see on this, I'm just going to go to full. We can even see these EMAs, right? So this moving average, this is the 26. It's the blue line, the moving average. It's been a metric for a long time. There's an undercut there. I bet you that was brutal, I'm sure. But it's been a metric for a long time. So it's still a good metric in my opinion. So coming down, it could test this level down with that EMA. Let's just look, but what does a weekly EMA look like? Yeah, it's below everything, but they are kind of reconciling. So these moving averages got to get back through those. So don't want to lose this 26 EMA, which is really coinciding with a lot of technical levels. So you have this low from that month, which is 2263. You got the Fibonacci retracement with the 382 retracement, which is 2293. And the moving average, I don't know the exact, I'll tell you right now what it is. 2295. Right? So we really don't want to lose 23 bucks, 22.50. It's just that simple from a technical point of view on a monthly chart. So if everyone goes, "Oh, it's traders." No, it's not. It's a monthly chart. So it's not about trading anything. It's about key levels at the moment. If we zoom out, yeah, I mean, there's some interaction here, and you have some volume profile to help us as support. So we got to hope that holds. That's a decent bar right there, but it's not monster strength like we see here. But now it's going to have to start running through back up through this volume too. So don't forget that it's going to start being resistance. But for now, we're looking at what support, what could reasonably support. That's 22.95, 23 area to me seems like reasonable support for SPUT for U.UN. And however it coincides with SRUUF, it's going to be right here, right? So it's going to be this 1650 to 17, right? It's starting to come into these zones, but we don't want to lose here because we're getting a little bit of an air pocket. I haven't been fully in tap here, but it seemed like SRUUF was kind of leading the action more than U.UN was. But I would have to start really digging back into that, and I'm not going to do that. Uranium spot UX1 it's broken down just a little bit. It's testing 78 now. So the gap is filled. Yeah, 78.20 filled this gap here. So there is some consolidation and structure in here, which is 72. I also have that white line because it's probably delineating, yeah, which is the breakout point. So 72 is the back test of the breakout from 2011. So again, an unbiased person who's never even done anything with uranium, doesn't know any fundamentals, has no idea that there's a nuclear renaissance going on, doesn't know about the supply demand issues. They walk in and they look at this chart and they go, "Oh, that's a breakout, and it's back testing. Cool. I'm gonna mark this chart up because I might be interested." That's what a basic technician is gonna do. You can see it from the life of the stock. So as bad as this action was and as poorly called by these fundamental experts, blah, 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 it's a great chart. We got to get through the election. We got to get through FOMC. It's a rough week. Patience, I guess. See how it plays. Over and out.